traders from across the globe, and welcome to the 966th edition of Short-Term Trading Live with Oscar Carboni, and that would be me. Hello traders, Oscar Carboni here once again bringing you the 966th installment of How to Read the Charts. Traders, this video being filmed on Wednesday night is valid for trading Thursday, January 10th, 2013. As we know, futures trading can be extremely risky and cause substantial financial loss, and futures trading is not suitable for all trading accounts. You can lose a lot of money in this game if you do not know what you're doing, and if you do not recognize that a stop is your best friend. Always use stops and make sure you have risk capital if you're going to play this game. All right, traders, so what's on the board? What is on the board is very, very interesting. Traders, we know that there are gaps out there. There is a gap below the NASDAQ. There's a gap below the S&P. And everybody on the street is talking about that gap. Now, I know this. I have grown up in this business. I started 31 years ago down on the trading floor in Manhattan. And back in those days, 31 years ago, I was taught a rule about trading. That rule is this: gaps always get filled. Now, we recognize that always is not reality. Always is a mindset and a way for us to live as traders. So in other words, when you see a gap, you say that gap's going to get filled every single time you see it, and almost always you will end up being right. You stick to your guns, the gap will get filled. Every now and then, a gap will not get filled, and that's the one time you'll be wrong out of many gaps that you'll see, because gaps always get filled is the mentality. So, that brings me to tonight. Wednesday night for trading, Thursday, January 10th. Gaps always get filled. That means we would expect the gap that is below the S&P to get filled. I am here to ask you a couple of questions. First of all, gaps versus flags. Which one is real? Because not only do we have gaps below the market traders, but we have bull flags, very strong-looking bull flags, and we have F flags, both of which are bullish. We have the bull flag, we have the F flag, both of them are bullish. We have them all over U.S. indices charts. So, the question is, which one is real? The gap or the flag? Do gaps always get filled, traders? Do gaps always get filled? Is always reality? Again, always is not reality. But if you do think you see a gap, you trade it with the mindset the gap will get filled. So, I have been standing here for 2 days saying this gap has to get filled. Gaps always get filled. I know it's just a mentality, but it really does work. And then I started to do even more homework, and I spent several hours this evening doing some homework on the gaps. And you know what I realized, traders? You're not going to believe this. I don't think it is a gap. I don't think the gap is real. What's real is the bull flag, and this market wants to go higher. Now, Omni has called for the market to go up, and I don't care that I know gaps always get filled. Omni turned bullish. I am here to tell you this, traders. We have a green arrow for trading on Thursday. I never expected it. I did my homework today expecting the downside, and when I was complete, Omni called for the upside. There it is, green arrow for trading on Thursday. Now, traders, again, gaps versus flags. Which one is real? Do gaps always get filled? If you like the analysis that you're about to see, you come on down to livewithoscar.com, because I will be holding a 4-day training session called Omni Camp. Omni Camp is where I will teach you for 4 straight days and nights exactly how to call the markets just like the Omni does. And you will be able to make the same calls that you see on this board night after night. Come on down to livewithoscar.com. Fill out your OmniCamp applications. I literally just printed all those applications today.
Traders, Oscar Carboni is holding another OmniCamp live in Las Vegas. OmniCamp is an intensive 4-day course taught by the Wall Street whiz Oscar Carboni himself. Oscar has been analyzing markets and trading commodities on and off the New York trading pits for over 30 years. Trading for a living is a very difficult business. Oscar will simplify the process so that you can easily understand and analyze the markets. Classes are limited. For more information, call 702-629-4755. Our phones are staffed 24/7. Futures trading is risky and can cause substantial financial loss. Trading futures is not suitable for all accounts.
Okay, traders, here is what I'm getting at. The NASDAQ daily bar chart. As you can see, there is a gap right here. Remember that this gap was the last trading day of the year while we had the nuts in Washington trying to decide if they were going to let us go over the fiscal cliff or not. And when they decided to vote, the market was closed. And when it was opened, when it did open, it opened much higher and left a gap. So, the question is this gap real? We do know this. There's a real bull flag right here, this red bull flag, and the NASDAQ is above that bull flag now. So, the question earlier was gaps versus bull flags. Which one is the real one? I do not think this is a real gap, and you will see why. Obviously, it is when you look at that chart, right? Let's continue. S&P, we know, has the same thing. It's got that gap, was left open from the last trading day of the year, and the fiscal cliff. We averted the fiscal cliff, and when we opened, it gapped higher and put in this wonderful bull flag. So, we know that a gap is very rare in the emini S&P. We know even more rare would be an unfilled gap. However, there's a bull flag, and Omni has turned green. It has turned bullish. Then we look at the Russell. Russell has a wonderful bull flag, and it's just about outside of that bear flag as we speak. That's what Russell looks like now. Russell looks really nice, very bullish, albeit it shows that same gap. Now, these are the indices charts. These are the ones that are being traded in off hours. Let's go look at some of the major indexes now that are not trading at night. Dow Jones daily bar chart, the Dow Jones Industrial Average. Traders, there is no gap. Look, this line goes straight up. This day went straight to here with no gap, turned into a bull flag. This is exactly what we look like right now. No gap, bull flag. That is a bullish signal, and that's that. So there's your Dow Jones Industrial Average. Is the gap real that's in the indices? I'm starting to think it's not. Omni has turned bullish. There is no gap in the Dow. Let's look at the leader of U.S. indices, the Dow Jones Transportation Average. There is no gap, traders. Zero, nada, no gap in the leader. You see that line, that bar? It goes straight to here. The next one is here. There is no gap. Then we are in an F flag. F flags can last for quite some time. When you get into an F flag, sometimes it can go for weeks on end. That is very bullish. There's no gap. I say that the gap in the S&P and the NASDAQ is not real. No gap. And we will simply move higher following the Omni. That's what we are expecting for trading on Thursday. But let's look at more. Traders, now we step out this view to a weekly view. Let's step out of the trees and look at the forest, so to speak, a bird's eye view. The S&P in a weekly, inverted head and shoulders, very bullish. Now it is in this wonderful parallel channel. What you'll notice is after it hits the bottom, it hits the top, then it hits the bottom and works its way back towards the top, and it's only right here, right now. On the weekly bar chart, the S&P is extremely bullish. Then you look at the NASDAQ, traders. You got to take a look at this chart. It's the NASDAQ weekly. When you look at this chart, it goes all the way back to 2009, the crash lows. It hits the bottom of this trend channel, rallies to the top. Once it hits the top, it hits the bottom. Hits the top, makes its way to the bottom. It just made its way to the bottom here. It should end up at the top up here somewhere. As you can see, once it tags the bottom, it goes and tags the top. Once it tags the bottom, it goes and tags the top. Here we are at tag the bottom. Why should it not go and tag the top? That is your longer-term view, weekly NASDAQ. Then there is the German DAX. Traders, look at this. This is a major, major resistance trend line. It goes all the way back to 2008. We bested above that in a wonderful fashion. This is a weekly, and we're all the way up here right now. That is strong looking. Target is all the way up here in your German DAX. And then we go back down to the daily and we look at the NASDAQ. A reminder, there is a gap. We say, gap is not real. This is a real bull flag that we agree with, and we think the market will go higher. Pull your own charts, do your own homework. That's what we expect for January 10th, Thursday, 2013. So, traders, you've seen the charts, and there is my technical argument for why we have the green arrow for trading on Thursday. That would be Jan 10th. All right, traders, so remember, those gaps that you're seeing in the indices charts, they're probably not real. What they are bull flags, because your Dow Jones Transportation Average and your Dow Jones Industrial Average do not have those gaps. The Transportation Average is the leader. The leader is pointing straight up. Omni is pointing up. I'm going to ignore those gaps below and call them not real. Which one is real? The flags are real. Do gaps always get filled? Yeah, when they're real. I don't think those are real. And away we go. Traders, if you like the analysis put forth in this video, come on down to livewithoscar.com. Don't trade alone. Come on down to livewithoscar.com and come into my trading rooms. It is free, and I will be there to help you understand the analysis behind these markets. Now, as I told you before the chart segment, our Omni camp will be being held in February, the last week of February. If you'd like to join me for a 4-day training session here in Vegas, come to livewithoscar.com and fill out your Omni camp applications. You applicants, I just literally printed your applications today, and I promise to start getting back to you to qualify you to see if you take those seats. All right, traders, so remember, trading for January 10th, Thursday, we're going to ignore the gap, and we are going to go with the bull flag, go with the green Omni, and remember to keep your stops in. Always use stops, especially when taking a trade like the one that's set up on this board for trading on Thursday. Traders, one of the best things you can do to keep your emotions out of trading is say this to yourselves every morning, every afternoon, every evening, and you know what that is. Stops are in. Emotions are out. Rock and roll and bull flags taking over those gaps. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided.